Hey everybody, I hope everyone is doing well. In this video, I'm going to review the Emini 5-minute chart from Wednesday, June 11th, 2025, and at the end of the video, I'll add a clip showing how I mark up the chart from today. It seems like that was something people enjoyed, and it seems like a pretty good method to continue, so I'll try to keep that up. So let's get into it. The blue lines are marking yesterday's high and yesterday's low, and then the green line is the open of the week. I want to talk about the daily chart first. And I talked about this yesterday, the context, where we are right now in the market cycle. Tight bull channel, bull breakout, deep pullback, second leg up to a new high, pullback, and then a third leg up, and the third leg subdivided into two legs of its own, one, pullback, two, and even the second part of the second leg subdivided into two parts, bull trend bar, pause, outside up, second leg up. So I thought this is not an ideal place to be buying, this being yesterday's high. So I thought today, going into today, that yesterday's high would be resistance. The market would have a hard time breaking far above the high of yesterday. And why is that? Because we have a late leg, and it's more likely that the channel evolves into a trading range. If you think about bulls are exhausted here. To be buying above the moving average, this far above the moving average, really the premise is that you're buying momentum. And back here, bulls are buying momentum. And once the momentum dries up, IOI, breakout mode pattern, there's a bear breakout. We have to go lower to find buyers. It's kind of similar here. We have three legs up, 1, 2, 3, or you could say 1, 2, 3. A couple ways to see a late leg here. The market is getting squeezed, and we may get the bull breakout, but because bulls are exhausted, bulls are taking profits at swing highs and then buying pullbacks and taking profits at swing highs. So traders are selling when we go above swing points, and we're breaking out above a lot of bars to the left, but it's a late leg. The momentum isn't great. It's not terrible for the bulls. The bulls have arguments. We have an open gap here. There is no close overlapping this bear bar. And even here, there's an open gap, at least a body gap or a negative gap. So the bulls do have an argument, but to me it looks like we have to pull back and probably test the start of the third leg before we go much higher, and that would be somewhere down here. So if we think about the trader's equation and equidistant moves, is it more likely the market rallies up here for a measured move up, or do we test lower and pull back? I think it's more likely we pull back. And because of that, I thought there would be more sellers above yesterday's high. For the bears, nothing really to sell yet, and by that I mean there's not really a stop order sell. I said there's open gaps for the bulls, and the selling pressure isn't great. But the bears do have the argument that this may be a channel evolving into a trading range, and if it's a late leg, like 3 or 4, then maybe they're scaling into shorts, looking to sell here, and maybe get a test of lower prices, whether that's the start of the third leg, or maybe even all the way down to the bottom of this pullback. For the 5-minute chart today, we gapped up above yesterday's high, but immediately reversed down. So bear breakout bar for bar 1, and we can draw a channel line with yesterday's highs. So the market is still in this broad bull channel. We can draw a trend line, we can draw a channel line. It's still, price is mostly contained between these two lines. So we're still in the broad bull channel, but we're getting a late leg at this point. This is at least like 3. 1, 2, 3. Maybe it's like 4 if you count back here. And a big bear bar late in a channel. Selling pressure here, bears sell with stop orders, they make a swing trade, and again here. So probably evolving into a trading range. The trend is getting weaker. And bar 1's a big enough bar that it's probably going to get a second leg down. But the odds that bar 1 remains the high of the day in general is about 20%. So second leg down likely for bar 1, but it's also likely we go above bar 1. Bar 2, trading range bar, minor reversal, probably sellers above, second leg down. Bears get their second leg on 3 and 4, testing the trend line. So the bears have a completed structure. Breakout, pullback, second leg, testing support. This is the buy zone. 4, not a great buy. It's a weak signal bar. The signal bar is big. If you bought with a stop order above bar 4, it's not even 1 times your risk to get to the channel line. Some traders might buy looking for breakout above bar 1. Others might look to buy a pullback. Maybe we pull back into the buy zone of bar 4. It's a better trade. You also have the moving average support there if you can get the pullback, but instead we broke out on bar 5. Bull breakout after 2 legs down and a test of the trend line. Probably will get a second leg up, and it's still likely we will get to the bar 1 high. Pause bar 6, but minor reversal, probably buyers below, second leg up, likely. Still not a great short, kind of in the middle of this bull channel, and it's better to trade with the trend. If you're in the middle of the range and you just had a bull breakout with an open gap, there's a micro gap from the bar 4 high to the bar 6 and 7 low. So trap traders here, probably buyers below, second leg up, likely. We tested the price with the micro gap, so bar 4 high. You can see bar 8 tested bar 4, the high of bar 4 to the tick and reversed up. Probably will go at least a little bit higher to at least the high of bar 1, and then follow through buying 3-bar micro channel, breakout to a new high. The problem for the bulls here is that we now have 2 legs up and we're testing the channel line. So there might be more sellers here. The upside might be limited. Low probability to buy here. In general, you get a successful breakout of a channel line and a breakout into a stronger trend about 25% of the time. So more likely we get the reversal within 5 bars and come back down and test the trend line. Bulls getting followed through. Bar 11 tested the trend line or the channel line, and we got follow through buying, but the bars are small. Bar 11 mostly overlapping the prior bar, so not as good as it could be for the bulls, but nothing for the bears to sell. Another test of the channel line. You can call it a high 2, high 1 bar 11, high 2, 13. And there might be buyers above, but the problem, again, is that we're breaking out of a channel line. Lots of buying pressure, good for the bulls, still nothing to sell, but dangerous to be buying in this area. And then we have a tight trading range, 11 through 15. And this might be a tight trading range final flag. There might be sellers above. And here, again, we're breaking above a channel line. And after 1, 2, 3, 4, 5 bars, we're stalling and starting to reverse back down. We're getting trending highs. So this bar, we're getting. So it looks like bar 14 poked above 13, but we're getting lower highs. And the structure for the bulls not supporting the bull case. It's still more likely this breakout fails and we get a test of the trend line. Now the bears have a legitimate stop order sell below 16. Bulls buying, taking a chance, doing a low probability thing, probably exit below 16, and 16 is a reasonable sell. And it did not trigger. It looks like traders bought the close. So these bars have the same low. But 17 is an inside bar. Inside bars are trading range bars. It did not break out of anything. And again, this might just be a tight trading range final flag. We can't ignore the big picture context where we are, breaking above a channel line. And if we think about day structure today, big bear bar, bar 1, unlikely today becomes a big bull trend day. Bull trend days usually don't start with big bear bars like this. And then if you take into consideration the higher time frame context, still I'm thinking this breakout above yesterday's high may not go very far before we reverse down. I think the higher time frame context supports sellers above yesterday's high. Bar 18, micro double top, up, down, up, down. So another legitimate stop order sell below 18. Also, bar 18 is a common reversal time between 10:30 and 11 a.m. Eastern Time. You've heard Al talk about the bar 18 reversal. Usually, maybe 80% of the time, by bar 18, the market has put in the high or the low of the day. And right now, bar 18 is the high and bar 4 is the low, and it's far away. But because of the structure of the day, yes, we broke out above bar 1, but what have the bulls done since we broke out? We've gone sideways for 7 or 8 bars. Really not ideal, not as strong as it could be, especially when you're trying to break out above a channel line. Again, we do not trigger the sell below 18. 19 is another inside bar like bar 17. How many legs up do we have? In the big picture, we have at least 4 legs up. And here, 15, 16, one push, pause, a second push, another pause, and a third push, 19. 19 being an inside bar and a third push, and in the context we're in, trying to break above a bull channel line in the higher time frame context is probably a sell to close bar. And 20, surprise bar. Bar 20 is one of those surprise bars. I've said this before. You ever watch a horror movie and you're expecting a jump scare? And a jump scare is supposed to be unexpected, but if you're expecting it, it's not really a surprise. That's kind of how I think about bars like bar 20. The structure here, the big picture context, and the structure, the bars on the 5-minute making up this pattern, kind of supports bar 20 happening. It's not crazy that bar 20 is a big bear bar. And we can see where we vacuumed down to yesterday's high. So bar 20, surprise bar, trapping a lot of traders up here. High probability that bar 20 gets a second leg down, even if it breaks or even if it pulls back deeply. And 21, there's support at yesterday's high, big down, big up, big confusion, second leg down likely, but bar 21 probably needs a second leg up of its own. Follow through buying 22, but we're testing the breakout point. We're testing an area where traders got trapped, so probably sellers up here, big down, big up, sellers up here, maybe buyers down here. Bears getting resumption, 1, 2, 3, 4 bars down. At this point, this might be a sell to close on 25. And I said, because we're breaking above the channel line, you expect a reversal within about 5 bars and then a test of the trend line. We have not tested the trend line yet. Bar 20 makes it very likely we'll get down to the trend line, and this might be the second leg down, leg 1, pull back, leg 2, and down to the trend line. And if you sell the close 25, stop above here, you're getting better than 1-to-1 to get to that trend line target. So reasonable to sell the close 25. 26 tested the bad sell signal bar, 23. Found sellers, resumption down. And then we got to the trend line in a hurry. Now we have 2 legs down, 1 pullback, 2, second leg subdivided into 2 legs of its own, 1 pullback, 2, testing the trend line. So probably buyers down here. But as far as buying here, can you buy a high 2, high 1, deep pullback, high 2, nested, high 1, high 2. 28 is a bad stop order signal bar, and there's really no buying pressure on the way down from 23 to 28. So as far as buying here, really not ideal. It's probably sellers above 28 for another leg down. So we poke above the past 2 bear bars. Really the last strong bear bar was 27, and that's where the market tested and then reversed. right back down. Now the bears have 1, 2, 3 legs down testing support. This is breakout mode. We're getting the bear breakout below the trend line. So get rid of the channel line here. We think about what's happening here. We have a bull trend, higher highs, higher lows. We're getting a trend line break. Now if this is going to be a major trend reversal, we need a trend line break, we need a retest of the trend's extreme, and then maybe we can get a lower high major trend reversal. So far the trend line break is pretty decent. We're getting a lot of bear bars on the way down. We're getting bars below the moving average. We're breaking far below the trend line. And really nothing to buy here. 35, probably okay to exit shorts above 35, expecting a pullback, but this is probably a minor reversal, meaning if you exit shorts here, you have to sell again below a bear bar, closing below its midpoint. So looks like bears exiting shorts above 35. 35, 36 reversal follow through, probably minor against this tight channel, but strong enough for a second leg up. Bears might look for a low 2 short. 37, now a 3-bar micro channel. Sellers at yesterday's high, and we're retesting this trend line again, but strong enough up for a second leg. So probably buyers here, maybe at the 50% pullback. Maybe you measure from the 35 low to the high of 37 or the close. Either way, probably support there. So it looks like buyers around the 50% pullback. But if you're trading against this tight channel down, like you see a 3-bar micro channel, leg 1, and you're trading for leg 2, you have to be scalping if you're buying, because you're trading against a more major bear breakout in what might be a major trend reversal. Broad bull channel, so the bull trend is weak as it is. It's a broad channel, so lots of selling pressure, swings up and down along the way. We expect the channel to evolve into a trading range. And if that's the case, we could test all the way back down to here. We could test the open of the week. We could test yesterday's low. So as far as buying here, yes, this should get a second leg up. But if you're buying, you're scalping, and the target's probably above, one tick above 37, or maybe this trend line. We vacuumed up to above 37. That's the minimum target for the bulls. Bulls probably scalp out here, and we find a reaction there. What about selling below 42 or below 41? Reasonable sell, but this still might be tight enough for the bulls for one more leg up. But I think it's okay to sell below 41. Use a wide stop up here. And then another buy climax. So 1, pullback, 2, pause, 3 pushes up against a tight channel, and testing the trend line that was broken out of. Now at this point, the bears see 3 pushes up, 1, 2, 3. They see a double top. Bears, they have a swing stop here, so they don't want the market to get above bar 29. Bulls see a tight channel, and they're looking for minor reversal and trend resumption, but at this point, the market's either in a trading range or a bear trend. 44 pokes above this swing point, running stops of bears. The problem with putting your stop here, if you're selling, is the trader's equation and the context. So if you're selling down here, stop up here, 1 times your risk gets you all the way down here. Once you get this against you, you know momentum is probably going to get at least 1 more leg up. And to be putting a stop, if you're a bear, to put a stop above 29, that means you're willing to buy above 29. Now, are you really eager to buy up here? Are traders desperately buying the close of 44? Probably not. With all the selling that took place here, we broke this trend line. Now we have 3 pushes up, and 43 being probably the best bull trend bar in the rally. This might be an exhaustion gap. So 45, if you bought for any reason, you probably exit below 45. And if you're a bear and your stop got run above 29, I think it's okay to sell again below 45. High 1, but bad context, probably sellers above. The bulls getting a second leg, but they got their minimum, and then we got a second reversal. So first reversal 45, second reversal 49. Low probability to sell below 45 after this spike. 1, 2, 3, 4, 5, 6, 7 bars up in a micro channel. First reversal likely to be minor, but the second leg can be brief. It doesn't have to be a leg 1, leg 2, another 7 bars up. 49 definitely one of those bars that always in bulls exit below and bears can sell below to get short. As far as the entry bar on bar 50, not ideal, but also not bad. It broke out below the prior bar. Not a lot of overlap. Probably 80% of the bar broke out. And on the same bar, it's a breakout pullback. So 50 is more of a sell the close bar or sell above. Not ideal to buy above it. And then we went outside down 51. Again, a more bearish outside bar, breaking further below the prior bar than above. This is probably going to get a second leg down. This is kind of a fractal major trend reversal. We have the bigger bull trend here, trend line break, retest, and possible lower high major trend reversal, but also here a more minor bull trend, trend line break, retest, sellers up here for lower high major trend reversal. 4 bars down in a tight channel, probably sell the close at this point. Probably going to test the bottom of the last bear swing for maybe a leg 1, pullback, leg 2. And no reason to buy here. Sellers above 53, outside down, sell the close, and then a big bar 54, probably a profit taking bar. A big bar like that on a trading range day might attract profit taking, but it doesn't mean you buy the close to get long. You might just buy the close to take profits on shorts. As far as a measured move target, maybe of this, you can call it a wedge bear flag, measured move down. Takes you between the open of the week and yesterday's low. So there are magnets down here, probably going at least a little bit lower after 55. And for today's day structure at this point, we have 55 bars into the day. You might call it a reversal day. We rallied on the open, bar 18 reversal. You might call it, what it might turn into is a trending trading range day, where there's an upper trading range like this, a bear breakout, and then a lower trading range. Somewhere down here. So profit taking on bar 56, but minor reversal. Probably sell the close, sell above, and bear's likely to get another leg down. And because of all the trading range price action from the prior few days, I think it's unlikely this becomes a strong bear trend. Bear trends usually don't have these big sell climaxes. Sell climaxes are more common in trading ranges, and they attract profit taking, and it's unsustainable selling. At some point, the bears have such big risk and such big open profits that they need to reduce their positions. So if bears are buying back shorts, bulls are always buying. There's no one left to sell. The market has to go higher to find sellers. We're testing a swing point here, open of the week, not far below. So the downside here might be limited. And if it is going to be a trending trading range day where there's an upper range, bear breakout, lower range, usually the bottom of the upper range becomes resistance in the top of the lower range. So we might go a little lower. Let's see. Maybe we get to yesterday's low, but probably not far below yesterday's low. We think about yesterday on the daily chart, it's a bad sell signal. It's actually a good bull bar, and there's probably buyers below. So probably buyers not far below, and we could go all the way back up to the bar 35 low and just oscillate in the lower range down here. So 58 getting close to yesterday's low and bouncing. Now at this point, probably better to be flat. If you are selling, it's okay to sell, but you need a wide stop. We could bounce again back up to this horizontal red line. And we'll probably come back and test the lows down here, at least the low close of 57, but we may get a bounce first. Bulls, reversal, deep pullback, second leg up, testing the low of 34, but probably resistance here. This is kind of a channel. Actually, it's a leg 2 on this time frame, and on a smaller time frame, bar 63 is leg 3. And it's all kind of nested. We have reversal and follow through 58, 59. That's leg 1 for the bulls. Pullback, leg 2, but leg 2 is a channel on a smaller time frame. Bull breakout, big tail, no overlap, second push, pullback, third push, and the bull bars getting smaller. And I'm also testing resistance, like I said, back here. So probably upside is limited. Bear breakout bar 65. In this context, probably the top of a trading range. 65 might be okay to sell the close, but after this many bars up, you'll probably get a small second leg at least, maybe test the low of 64, probably sellers above, but okay to sell the close, looking for a test lower, and then getting follow through, but probably going to bounce around here. We're testing that low close where 57 didn't get much follow through. We went a little lower, but the low close down here is support. So you can see the market's reaction to that price. So it looks like we have an upper range, a bear breakout, and a lower range today. That's pretty much what we did. We stayed in this lower range for the rest of the day. That's going to be it for the review on TradeStation, and I'll go over to the PowerPoint slide now. And for me, today was a trending trading range day where there was an upper trading range and then a bear breakout and a lower trading range. So for me, if I classify it as a day type, subtype, and tone, I would say it's a trending trading range day. The subtype is an upper trading range, lower trading range, and the tone is bearish. So that's going to be it for today's review. Thanks everybody for watching and listening, and I hope everyone has a good night.